Well, good morning, everyone on the west and central coasts, and good afternoon to those on the east coasts. My name is Deep Sen Gupta, and I'm the founder of DSG Global Academy, and welcome to the Beginner's Guide to Export Compliance. Welcome to each one of you, and before we get started, I'd really like you to take a piece of paper and write down the questions that you have that you'd like answered from this webinar today. I've seen that the most effective presentations are actually where the audience gets their questions answered. So feel free to write down all the questions that you have about the export process, and I'll be sure to discuss that at the end so that I can cover all your questions. So I'll just give you a few seconds to jot down the questions that you'd like answered, and then we'll get started. Thank you. All right, friends, we'll jump right in. This is the agenda today. It's similar, but not the same as another seminar on the subject, which is export compliance best practices, which is for a more intermediate audience. And this presentation is more for a basic audience. It's 90 minutes as opposed to 60 minutes, and we'll cover many basic issues as well as questions and answers. So we'll first look at a quiz on export compliance. But don't worry, I won't call on anyone. We'll just go over some typical questions. We'll go over the export process and the roles of the freight forwarder, customs duties worldwide. We'll also look at the various export agencies that are involved in the export process, such as state, commerce being the primary ones. And then we look at export licensing and why is it important, and when would you be required to get an export license. We look at red flags, penalties, the new EEI reporting through ACE, and other export compliance guidelines and best practices for export compliance. With that huge agenda, let's jump right in. Now, around the country, when I give these trainings, I ask people, just to kind of limber them up, and I ask them these 10 questions on these next two slides. And that gives me a good idea of the level of compliance within these companies. But more than that, that also gives these companies a very quick checklist on what they need to fix when they go back to their companies. So let's get started. Number one, do you have an export compliance department? It could be a department of one. Number two, do you have an export compliance program? By that I mean a compliance system of checks and balances, procedures, training, something documented. Talking about documented, do you have a compliance manual? Many companies think they have a compliance manual, but I look at it and it's a bunch of bullet points. So do you have a document which you could give your successor when you're going off on holiday, saying, this is the only document and instructions you need. Good luck, you'll be in great shape. Number four, do you have an updated product dictionary with all your ECCN numbers and Schedule B numbers, which those of you who are not familiar is very similar to the HTS numbers, the Harmonized Tariff Code, but they're for export reporting. So they have a little more zeros at the end. Number five, I'm delighted that y'all are doing your annual training, so that's good. But it's not just about y'all receiving training yourselves, but imparting this training to other relevant departments in your company, like customer service, purchasing, finance, legal, traffic, and so forth. Number 6, how do you ensure that your products are not being shipped to prohibited destination countries and embargoed countries? I used to do audits, I still do, and once I asked a company, so how do you explain your export process if you were shipping to England? And they said, well, simple, we get the purchase order, we prepare the documentation, when the product is ready to ship, we prepare the commercial invoice. And I said, and what if the country was Syria? They said, well, same process. Now, that was a trick question because Syria, as many of you know, is an embargoed nation that you cannot ship to. So your system should have some checks and balances against shipping to these countries. Do you perform internal audits on a regular basis? It could be half yearly, it could be quarterly, it could be annually, it could be every 2 years, but that's something that the government looks at as a best practice. Similarly, reviewing your export documentation for human errors and accuracy is a great idea. And just like the import side, are you also reporting any discrepancies to the government so that it's known as a voluntary self-disclosure, where you're informing the government of violations before they find out and give you a huge penalty, right? And finally, do you think your company can successfully pass an export enforcement audit? Hopefully, all of you have answered yes to many of these questions, but if not, highlight those questions as areas for corrective action for your company. So let's move forward. Friends, having worked in a previous capacity for one of the largest freight forwarding companies in the world, where I managed their trade consulting group, I've seen that the companies whose shipments get held up every time are the ones with really the bad reputation of having inaccurate, inconsistent paperwork, because the regulatory agencies know that this company always does it wrong. But the flip side, if you do it right with the proper documentation, accurate information, usually your goods fly through customs. And what we've seen, everyone talks about trade compliance as in it's a legal regulation, but what I've seen is trade compliance can actually save companies money. And the way they do this is by doing their research and reducing their landed cost and customs duties by knowing what the legally accurate HTS codes are and the customs duty rates are, so they can predict the landed cost. Number 2, by joining certain government cargo security programs, they avoid shipment delays, and they're on the right side of customs, so their goods go through with minimal inspections for the most part. And number 3, by having a good compliance program in place, you can really reduce, I should change that slide which says prevent, the answer is reduce avoidable import or export penalties, because you've got a tight compliance program in place. So that's why compliance really pays for itself. Friends, in the export process, I recognize most of the names, and I know y'all are experienced exporters, but essentially, there's a lot of stuff to take care of. Not only prepare the documentation, getting your packaging right and compliant, getting product compliance in place with proper labeling. Many times companies use their freight forwarders and they say, oh, our freight forwarder handles everything for us. In addition, there are you've got to select the right shipping company for you, select the right Incoterms, get the right insurance, as well as look at the various tariffs that might impact your shipment. So let's just look at these background issues before we proceed into the main portion of this presentation, which is export compliance. A freight forwarder is really your agent who helps you facilitate the export. They take care of picking up your goods, complying with not only US export rules, but also the foreign countries' import rules. They book the cargo, they prepare the electronic export information filing, which you're required to do, as well as clearance through the customs at the foreign port of entry. The information that your freight forwarder needs could be several, depending upon your product classification. For example, if it's chemicals, pharmaceuticals, certain wireless telecommunication items, it may require additional information. But typically, you're looking at an airway bill or bill of lading, depending upon if it's air or ocean, commercial invoice, certificate of origin is required by many customs agencies around the world, packing list, and depending upon whether it's pharmaceuticals or comes into contact with the human body, there could be something known as a certificate of free sale. Some items which may need an export license, your freight forwarder might ask you for a copy of that license so that they are not liable for violating export controls. One area that I've seen, which is really incredible, is that companies spend a lot of time hiring lawyers and a large tax team to reduce the corporate tax burden on your company through an intricate web of advanced pricing agreements and valuation studies. They can manage to reduce your corporate tax rate by a few percentage points. However, when it comes to customs duties, I've seen many logistics managers just get the bill, sign it, and send it to accounts payable. So duties and taxes is a very important area that I'd like you to potentially look at. And it's only once you look at it that you know how much you're paying can you decide ways and strategies to reduce your global customs duty spend. So ask yourself, do you currently know how much duty your company is paying? You can get this information from your transportation companies. Do you know how the customs duty is calculated? Some countries like Brazil and India are really complicated, but you need to figure out and understand how it's being done, and that really helps. Sometimes when you review the invoice you get from your freight forwarders, are you sure that the customs calculation makes sense and is not overly inflated? And finally, ask yourself, can you be more efficient in customs planning? For instance, if you're shipping goods on a short-term basis for exhibitions, demonstrations, could you be using maybe an AT carnet? Could you be using a bond for in-transit into that country? If you get a lot of defective goods coming back into the country that may be American goods returned, is there a possibility of maybe using Chapter 98, which allows you preferential duty rates for American goods returned? Finally, ask yourself whether you can apply for binding rulings from the customs agencies in the foreign countries so you can really try to choose the most advantageous customs duty rate. Ask yourselves these questions and set a goal to try to reduce your global customs duty spend. Before that, obviously, you need to know what your landed cost is, and you can do a study trying to get all the information from your freight forwarders or transportation companies. Usually, the landed cost is not just the sales price of your item. It's also transportation costs, port handling fees, costs of special packaging or inspection, customs brokerage fees, customs duties, and other import taxes that are very common around the world, like a VAT or a GST in different countries. So here are a couple of ways to minimize duties and taxes. Number one, identify the product and the major product groups that you've been shipping, which is, a majority of your business, and try to find out the best tariff code for that item. And what I would highly recommend to, most of my companies with global operations is you should try to provide the foreign harmonized tariff schedule number for that item on your commercial invoice. Because if you provide a US number, I assure you there's a customs broker on the other end who's trying to figure out what this US HTS number is in their country, either be it China or Brazil or Mexico, right? They have to cross-reference it to their country's HTS code. Number 5 talks about the origin of the country of the product. Try to find out if there's a free trade agreement. If you're importing into the United States or say exporting, there's over 20 countries we have free trade agreements with. Could be Australia, Bahrain, Israel, Chile. So find out if your country has a free trade agreement, what the rules for that free trade agreement are in order to be eligible under that free trade agreement. You don't want to claim NAFTA if your products are not eligible for NAFTA, right? So one needs to do some eligibility analysis, and then by all means go ahead and use those free trade agreements. Just a couple of other tips, such as using binding rulings whenever the classification is vague. If you have multiple related parties or subsidiaries around the world, do some transfer pricing study because customs agencies have started to really look at transfer pricing studies favorably. In the past, they would say, oh, that's a tax study, we don't care. But increasingly, they look at it kind of in a comprehensive fashion and say, okay, you've got a transfer pricing study that you're placing reliance on. We'll take a look at it. So, yeah. A little bit about the harmonized tariff schedule. Friends, if you're not familiar, there's 99 chapters that can cover mostly all products imaginable. And you need to provide the harmonized code rather than have your freight forwarder or broker come up with it themselves. You know your product, and the HTS code determines what the customs duty will be. So it's very important that you classify your goods and provide this, what's known as a product dictionary to your customs brokers. If you can provide the destination country HTS code, more power to you. That would really help you as well. This is the process that companies use for HTS classification. You've got to first look at the broad chapter, then drill down to the heading, read the applicable section notes and chapter notes that may include or exclude your product, and then find the appropriate tariff line number. So this is a 10-digit number in the United States and most countries. Some countries that are more developing just have an 8-digit HS number, they call it, harmonized system. If you need to figure out the harmonized tariff classification, the best way is obviously an expert, but also working with your internal teams who have good product knowledge, like the engineer, the scientist, the chemist, and going through the HTS categories together, they will be able to fine-tune the correct HTS number as well, based on their knowledge. And obviously, you should bring with it your knowledge of the broader HTS system. There's something known as the General Rules of Interpretation, the GRIs, that you should use when classifying any items. It's like the rules of logic for classification. And whenever in doubt, you can always request a binding ruling from customs. Many of my customers, especially those with 0% duty on their items, even though it's very clear that their items might be 0% duty, they still like to get a classification ruling from customs, just as insurance. In case customs changes their mind and sends them a letter saying, hey, you've been bringing this product under this 0% code for the last 5 years, we think it's 2%. So rather than customs going back 5 years, getting a ruling is a great best practice. Always remember that customs can always revoke and change their minds, but that happens in the rarest of cases. From an export perspective, knowing your Schedule B number is very important. Schedule B numbers are actually managed by the Census Bureau within the Commerce Department. And the Census Bureau wants these Schedule B numbers so they can prepare trade statistics of how much the United States is exporting around the world by country per Schedule B number. So that helps them in their trade negotiations with different countries. They can say, hey, we've been shipping this many motorcycles to your country, and and you've been shipping way more of mangoes to our country. So they can adjust tariffs, and it helps with trade negotiations. Schedule B numbers, usually the first 6 digits are the same as the HTS number. In some cases, the first 8 digits, in some cases, maybe the full 10, but definitely the first 6 are the same. And because it's for reporting purposes and not for customs duty determination, that's why you have more zeros at the end, because the government doesn't need to get too specific under certain product groups. My friends, another aspect on the export process that I really want to mention is understanding foreign import regulations. You see, export compliance is mostly about complying with US export rules. But if your product doesn't get into the foreign country where it's an import, then you could have a headache as well. So I have seen so many examples of where countries ship their product and then they see, oops, we needed a distributor or a local presence in Brazil for this item. They might ship to India and say, oops, we actually needed an importer-exporter code from the Indian government, which we didn't have. And guess what? It takes us at least 30 days to get it. So, or you ship to another country, Brazil, and you say, oh no, we needed, product certification, or China, you say, oh, we needed the CCC mark, which is the compulsory Chinese certification mark. So the point I'm trying to make is, if you know your product, which you obviously know very well, before shipping to any new country, always trying to find out if there's any restrictions or special permissions or documentation that you need. Invariably, and this is very unfortunate, but it's the person at the shipping dock that has been charged with this responsibility. The goods get out and then say, and he or she has to determine whether your product needs special permission in China. And usually it's too late to research this, because the UPS or FedEx shipping person is coming at 4 o'clock and he or she has to rush the shipment. So what I would recommend, every time you have a new customer or a new order in a foreign country, that's the red flag to start researching the rules of that foreign country. This information on foreign country import restrictions you can get from your freight forwarder, or even from the US Commercial Service, which has excellent tools in dealing with foreign countries. And they also have offices in foreign countries. If you all ever need any assistance, I'm happy to make introductions or put you in touch with the right offices. Other, checklists, always have a checklist of all the forms you need before you ship the product out the door. Some other customs clearance tips. This, I will tell you, is based on hundreds of errors that I've seen. Number one, complete all the necessary documentation correctly, legibly, and consistently, which means the information on one form should be the same as the information on the other and not have a different product number or a different HTS or a different contact information of the parties. List each commodity separately, giving a detailed description of the commodity so that the customs officials at the other end can figure out what the product is, and it's not just XYZ 813893. You know, I mean, they have no idea what your SKU number really is. Provide the destination country HS code, as I've been suggesting, can really speed up your shipments and not get it held up in customs, or in the cage, as I call it. The country of origin and manufacture is very important. And finally, if your goods get held up at any point in the supply chain, it's really helpful to have the phone number listed of the consignee and not just the consignor. Because suppose your goods land up in South Korea, it's easier for them to call your customer or consignee in South Korea rather than call you in, Los Angeles, for instance. Many times, countries around the world have different duty rates for the same item. And that's because of their historical economics. Some countries were trying to protect their domestic industry. Some countries were trying to increase trade. Some countries are trying to collect a lot of revenues because they rely on customs duties. As a result, what we normally see is that poorer countries, or as we call it, developing countries, they rely more on customs duties, so they charge more customs duties. Countries that are industrializing, I just made up that word, sorry, that are in the process of industrialization, they also charge higher customs duties because they're trying to protect their domestic industry. Now, thanks to WTO, over the last 20 years, countries have tried to phase out its high customs duty rates and bring it lower. But what we've seen is that the most developed industrialized countries have the lowest customs duty rates because they know that lower the customs duty rate will spur international trade and increase their gross domestic product, or GDP. But the point is, developing countries have higher customs duty rates, and what they've seen is that more importers, for the lack of a better term, cheat and misrepresent the value because they're trying to minimize the exorbitant customs duties they're paying. I see this a lot in South America and certain other South Asian countries with higher duty rates, where the foreign customer might say, could you please lower the value of the good on the commercial invoice? And let me just say that is something you should never do, because then you would be an accomplice to their smuggling, right? Or their illegal act. So always put the correct value, because the foreign customs officers will question you if the value appears to be too low. Friends, let's jump into some US export compliance now. What is an export? Now, under the EAR, which is the Commerce Department's Export Administration Regulations, an export is not just your physical shipment, be it shipping avocados or be it shipping cell phones. It's not just the physical. It also includes any intangibles like software, technology, that would also be covered under the definition of export, because it's a transmission of any item. Also remember that if any re-export from the United States, let's say from the United States, you're exporting to Canada, but Canada is exporting to, say, Cuba. That second transaction is a re-export, which is also covered under US export regulations. Finally, if you make your products available to a foreign national in the United States, and by available, I mean making the technology known or giving the foreign national access, that is deemed to be an export to the country that foreign national is from. Now, that will only require a deemed export license if the person's country of citizenship, let's say Iran, you need a license to ship to that country. In that case, that foreign national that you've made your product available to in the United States, you'd need a deemed export license. Okay. A deemed export is very important in the Silicon Valley, where I'm based in San Francisco, because there are a lot of brilliant foreign engineers dealing on some very complicated technology issues, encryption, cloud computing, so on and so forth. And what the US government says is that if somebody's, if they're a green card or a permanent resident or a US citizen or a protected individual who's got asylum, deemed export rules do not apply. But if they're on a student visa or a visitor's visa, business visa, or even an employment visa called the H-1B, if you release any technology or software source code to that foreign party, and that foreign person is from a country where you'd normally need an export license to ship from, then you cannot make that technology available to that foreign national without getting a deemed export license. The good news is that 99% of deemed export licenses are approved. You just need to provide complete details of the foreign national's biodata, resume, showing no more than a 6-month gap in their educational and professional history. Wow, look at this. These are all the different agencies that have some rules regulating US exports. Let's look on the left-hand side. The Commerce Department. Not only do you have a side of the Commerce Department that promotes US exports, they're called the International Trade Administration Bureau, but you also have another bureau, which is Export Enforcement, which is the BIS, Bureau of Industry and Security. And their job is to see that sensitive goods don't fall into the wrong hands. The Treasury Department, the second one, they manage two things. Not only the Office of Foreign Assets Control, which deals with shipping to any embargoed nation, such as Iran, Syria, the Crimea portion of Russia. But also they own a process called CFIUS, which you may have heard. Every time a foreign a company tries to acquire a US company, CFIUS is an interagency US committee that's managed by Treasury, and it's called CFIUS, which is Committee for Foreign Investment in the United States. And they want to see if the foreign company taking over the US company creates a national security or defense concern. Recently, I had a couple of clients who were Singaporean, and they wanted to buy a company that makes satellites in the US. So we're currently under CFIUS review. You may also have heard of a Chinese company that wanted to, buy some ports. The government actually came in. Sorry, I take that back. That was a Dubai company trying to buy some ports in the United States, and that was denied because of national security and defense concerns. The State Department, which is the next bullet on the left-hand side, they deal with all exports concerning military or ITAR items. ITAR stands for International Traffic in Arms Regulations. The US Census Department, they deal with export trade statistics like the EEI information and Schedule Bs. EEI, as we talked about, is the electronic export information. And finally, the Department of Homeland Security, which is the parent agency of US Customs. They actually monitor and enforce this EEI filing on behalf of US Census, because US Census doesn't have the number of personnel. Now, on the right-hand side are other technical departments that deal with other issues, but they all have some export law that might be applicable, such as the Department of Energy, Department of Agriculture, Food and Drug Administration, so on and so forth. Let's very briefly talk about ITAR. Let me just say that 99% of all exports shipped from the United States are not covered by ITAR. ITAR, as we've said before, is International Traffic in Arms Regulations. But, and that falls under the State Department's purview. So 99% of goods are okay, they fall under the Commerce Department's purview, but 2% fall under ITAR. And you need to first determine if the products you're shipping falls under ITAR. Usually it's hardware, technical data, defense services that are specifically mentioned in the US munitions list. Many times my customers are not sure because their products may have a civilian use, but they could also be used for the military. So the question is, well, was it designed specifically for the military? And in that case, if you're not sure, what we do is we submit a commodity jurisdiction request, which asks the State Department and the Commerce Department, so tell us which agency has jurisdiction over us, over our exports. Is it Commerce or State? And they usually get back to you in 30 to 40 days saying it's State or it's Commerce. If it's State, it's a little more complicated. Commerce is much better. That means there's less restrictions. And the definition of export under ITAR is sending or taking a defense article outside the United States in any manner. Friends, since I can tell from the attendees today that we don't have anyone really into ITAR, I think in the interest of time, we'll keep moving on. But if any of you have any questions regarding ITAR and defense exports, feel free to send me an email. I'm thrilled to answer it or even set up a call with you. Defense services are also covered under the ITAR, which is the State Department's purview, as well as technical data, which is all related to the defense articles and defense services. There are obviously some exclusions on generally available information and basic marketing information. Okay. Now let's talk about the agency that deals with 98%, I said 99 by mistake, 98% of all US exports fall under the Commerce Department's realm, which is mostly commercial shipments. But there are some items which are predominantly commercial, but could also be used for a military purpose. And those goods are known as dual-use items. These dual-use items are very important for the government to monitor because they could be used as weapons of mass destruction. And certain state sponsors of terrorism or certain countries that are not really friendly with the United States, they like to buy these dual-use items for their military, but they won't buy directly by the military. What they'll do is they'll set up these laboratories or third-party distributors or front companies, and then they'll import it from the United States, but it will all end up in that foreign country's military use. And this has happened with Iran, China. These are documented cases. So the Office of Export Enforcement actively does investigations to ensure that these items are not going into the wrong hands. Like I told you before, military items is a small percentage of all exports, and civilian use is a larger chunk of all exports. But dual use in yellow, that's the items that the government is interested in controlling, because it's purely for civilian use. You could buy it anywhere, but it could be used also for a wrong purpose. For example, these are all civilian use items which are used in laboratories and industrial setups, but they can also be used for nuclear weapons. Let's see. Centrifuges, mass spectrometers, vacuum pumps, thermal cameras. Simple stuff like stuff you use in a lab can be used as biological weapons, like bacterial strains, growth media, fermenters, and so on and so forth. Under missiles, you'll see composites and aluminum alloys. I actually had a client who does this, just aluminum alloys, all this new age material, and it turns out that you can use this in supersonic aircraft. So they had to come up with an export compliance program and many voluntary disclosures to the government, some fines. Let me just say that the last 5 years was an intense period of export control reform, where the government said, you know what, stuff that doesn't need to be controlled with the license anymore, let's decontrol them. And let's only have, in their words, high walls around a smaller set of sensitive export goods. So instead of saying, whoa, all of this is export controlled, the government really went through a process of identifying items that really needed to be export controlled. And I'm just very proud that I was part of that process the last 5 years on the advisory committee to the BIS. And I could see that they put in a lot of effort to simplify export controls. And if you wonder, wow, even after simplification, it's so stringent, well, obviously there's a reason, because there are forces that undermine US security that are still trying to buy some items. So when do you need an export license? Wow, this is a very complicated diagram, but I'll make it simple to understand. You first need to decide if your item right under the red arrow is subject to the EAR. And remember, it's not subject to the EAR if it's either not an export or if it's covered under the State Department's ITAR regime, right? And there's many steps here, which I'll try to simplify in the next slide. Really, you need to ask yourself these 4 questions. Number 1, you need to find out the ECCN number for your export. Secondly, you need to check what's known as the general prohibitions. If your product falls under one of the general prohibitions, you cannot ship it even if it's something as basic as a wooden stool, right? You are not allowed to ship to certain people, certain companies, certain countries, and for certain prohibited end users, regardless of the product. Now, the first step when I said determine your ECCN number, that was to figure out if your item is listed in the Commerce Control List, which is a list of sensitive technology. If your item is not listed, then your item will be called EAR 99. That would be its ECCN number, which means EAR 99 means your item is not listed in the Commerce Control List. Now, if your item is listed in the Commerce Control List and has an ECCN number, there'll be a reason for control listed there. And what you need to do is see if there's an X in the box for the country you want to ship to. Okay, so even if there's an ECCN for your item, and if you see, oh, I'm shipping to Netherlands, it's okay. There's no X in the box for Netherlands. But if I'm shipping the same product to Riyadh, Saudi Arabia, there's an X in the box. Okay, so that's because of the end destination. And finally, even if there's an X in the box, see if there's any license exception available. If there is, then you can ship without a license. Now, if there is no license exception, or if there's a general prohibition, then you need to apply for an export license from the Bureau of Industry and Security, called BIS. Let's talk about the first step of finding your ECCN number. Now, the Commerce Control List on the BIS website, just type in Commerce Control List, BIS, and you'll go to the website. You'll see there are 10 categories of products. 0 is nuclear materials and miscellaneous items. It also has biological items, chemicals. Many of them also fall on number 1. Number 2 is materials. Number 3 is electronics, like semiconductors, microcircuits, integrated circuits. Number 4 is supercomputers and other computers. Number 5 is actually broken out into 2 parts. 5A, part A is telecommunications, and part B is information security. That's mostly got to do with encryption. Any sensors or lasers fall under 6. Navigation avionics under chapter 7. Marine propulsion systems, chapter 9. Sorry I had to read through it. I just wanted to kind of show you the different breadth of items. And to find out if your item has an ECCN, what you've got to do is, I've taken this example of chapter 3, which is electronics. Remember, the letter after 3, which is the product category, will be the type of product. A is equipment, B is test equipment, C is materials, D is software, and E is technology, like blueprints and other technology plans. So the best way to find the ECCN for your item, and I say if you haven't done your ECCN studies in the last 4 years or updated it, it's time to update your ECCNs. The first thing you should do is, if you're getting your products from a manufacturer, ask your manufacturer for the ECCN numbers. If you make it yourself, ask your scientists, chemists, and engineers. Give them a little bit of training on the CCL, Commerce Control List, and they will look at the relevant section and see if your product meets those technical parameters. And finally, if you're still not clear what your ECCN is, submit a license request to the BIS using their online tool called SnapR. The second step, whether or not you have an ECCN, if you don't, then it's EAR 99, as I said. Whether or not it's EAR 99 or if you have an ECCN, you cannot ship if any of the general prohibitions apply, which means the person you're shipping to is on the denied parties list, or it's a prohibited end user, or it's an embargoed destination, such as Syria, Iran, Crimea, which was overtaken by Russia. And finally, if you look at the last bullet, it says prohibited to proceed with the transaction if a knowledge violation occurs. What that means, I'll give you an example. I've got a broker, a freight forwarder friend in San Francisco, and he said, "Hey, Deep, I've got a question." I said, "What happened?" He said, "I've got this Mexican customer that wants to ship many pipes of steel, And it's kind of a like high-grade steel, which is controlled. Maybe it goes into missiles. Who knows? It was high-grade. He said, but I know that it's going to go to China because I heard some talk. You need an export license for China. So, this freight forwarder asked me, can I just ignore I heard that and say, hey, Mexican customer, I'll give it to you. Whatever you want to do is up to you. I said, sadly, my friend, because there's been a knowledge violation and you have a pretty strong hunch that they're going to ship it to China in violation of an export license to a Chinese laboratory which was on the denied party list. Therefore, you cannot proceed with the transaction because you have a knowledge violation. So that's an example. Embargoed countries for the BIS is Ukraine, Cuba, Iran, North Korea, Syria. Cuba has significantly relaxed its the United States has relaxed the rules, but there are still license requirements in place and the embargo. ITAR has a much longer list of items that you cannot ship ITAR goods to. Afghanistan, Belarus, Central African Republic, Cuba, much longer list. I recommend every company that exports take a look at this consolidated screening list. What this is it includes all the various restrictive lists published by the US government that you cannot export to, like the denied persons list, the unverified list, entities list, debarred lists. These lists were always different about 10 years ago. Just a few years back, the government consolidated these lists. You can download them as a spreadsheet, or if you do many exports a day, what you could even do is you could get a third-party software that bolts into your ERP, so they do the check against all these consolidated restricted party lists on a daily basis. So as soon as you ship, it'll say, oops, there's a flag with a potential restricted party. So the software isn't for everyone, but if you do several export transactions a day, it might save you time. Sorry. Oh, that's funny. Oh, okay. Step 3, check if there's a X in the box in the commerce country chart. Now, let me tell you where to look for this information. Once you look for your ECCN number, and let's say this is an airborne altimeter. Okay, this is on the commerce control list under category 7, it's 7A006. Then you will see what the license requirements are and the reasons for control. It says NS, MT, and AT are the reasons for control. NS is national security, MT is missile technology, and AT is anti-terrorism. And then it'll tell you at the bottom whether there's any license exceptions available or not. Here it's not. So looking at those reasons for control, we then go into the various reasons for control. We go into the country chart. This is the country chart. And you see here, for instance, Honduras, we're saying a taser, the taser that the cops carry, you can ship it to Iceland because under the crime control, reason for control, there's no X in a box. But you can also ship it to Hungary, but you cannot ship it to countries like other countries like Guyana, Haiti, Honduras, Hong Kong, etc. Finally, if there's an X in the box for those countries and you really need to ship it, then try to see if you have a license exception. These are the various license exceptions. I won't go into what it means in detail, but if a license exception is available to you, it'll be listed in the commerce control list under the ECCN number. If you do not have any license exceptions available, or if there's a general prohibition, under those instances, you need to submit an export license. Export licenses take a minimum of 30 days. It could go up to 40. So I tell people at least keep a 45-day window if you need an export license. You apply using the SNAP-R process, which is their online platform. No charge, and you can submit up to 6 items on SNAP-R. So, if you ever need export licenses, please register and use this system. It's very efficient. One point I want to make about export controls is that the US Export Administration Regulations, which is the governing document, requires a 5-year export record-keeping requirement. So that means not just your documents needed, but also your AES abstract, any financial records, sales contracts could be asked for. Friends, I just want to go over some common violations that happen even in the best of companies, and we'll try to analyze why it happens. A violation obviously is defined as not getting the correct export licenses when needed, or either for yourself or your export or your re-export or your deemed export, right? So many times companies are just overwhelmed by quarter end, or there's a new personnel that goes by outdated documentation. Remember, export control has gone through a lot of changes in the last 5 years. So if you're using outdated information, you could be at risk as well. Many times the export manager might just take off for a few days, and his or her backup might not be adequately trained. Or, and this happens a lot, I say, with due respect, I say that the sales team is the biggest culprit many times when it comes to export controls, because they try to sell to anybody who would buy the product, right? So many times those people may be distributors who then want to ship to an embargoed country. So please find out and have the requisite export controls in your paperwork. Absence of an EMCP, which is an export management compliance program, or a system of checks and balances for export compliance, is another major reason companies make mistakes. Always look out for red flags. If there's something suspicious about the transaction, please be sure to review, refrain, and even escalate to your senior management. Just some examples of red flags where the customer doesn't want to provide information about the end use, or it seems like the customer is a freight forwarder or a middleman or a front company, and it doesn't make sense that they're buying this product for their country or their business, or they're willing to pay cash upfront. Right, all of these have happened before. So let me just say the 6 questions before any export that you need to ask before shipping product out the door is: number 1, which agency has jurisdiction? Is this a ITAR controlled State Department jurisdiction, or is this dual use or regular commercial use, which is covered by commerce? Number 1. Number 2, what is it? What is its ECCN number? Find out. Number 3, where is it going? Not just the immediate destination, but try to understand the ultimate destination. Because as you know, certain ultimate destinations are prohibited. Who will receive it? The ultimate end user cannot be on the denied party lists or the restricted party lists. Number 5, what will they do with it? As you know, they cannot use it for weapons of mass destruction, missile production, chemical, biological weapons. Now, I bet you're thinking, Deep, that's brilliant, but nobody will tell you that they're going to use it for those purposes. I agree. But, I had a customer that makes measuring equipment, for instance. And, their products were being requested in certain military labs around the world. And, we had to ask the question, what exactly is your lab making, So you need to do that due diligence. Number 6, what else will they do with it? Are they just a front company? Are they a reseller, freight forwarder, distributor? Try to find out more about why they need your products, if your products are sensitive. Friends, penalties is the place where people wake up, because export penalties are some of the most stringent. Wow, it could go up to $1 million if it's criminal penalty, but civil penalties can go up to $250,000 per violation. But they could also the government could deny export privileges to you. So that's also significant. I didn't want to actually mention company names, but there's a publication on the BIS website called "Don't Let This Happen to You." And that is actual cases with company names of people who have received export penalties. And why I didn't want to write their names, because they could be customers of mine. Let me just say Company A, Company B, and Company C. Company A made a simple mistake, but they kind of made it repeatedly to a certain country. I think this was Venezuela, and they got a $269,000 penalty and 1-year denial of export privileges. Another company was shipping software. It was being sent to Russia, as well as some integrated circuits that are being used in the airplane program. And they got some jail time, as well as criminal fines of $1 million and a 3-year denial of export privileges to Russia. Suspended means the court decision was taken 3 years later, so they said, okay, the past 3 years, we'll include that as part of your 3-year denial. And let me just say that recently there was a huge penalty case called the ZTE case, where a Chinese telecommunications company actually documented in their policy that it is illegal for us to get stuff from the USA and send it to Iran, but they still did it. It took a year for the government to negotiate with this company, and finally, in the Trump administration, they were assessed $1 billion penalty. It was 800 million of that was Commerce Department's export control penalty, and 200 million plus was the Department of Justice and Treasury penalties. That's the poster child of export penalties right now, because they were really trying to evade the US export rules. OFAC, which is Office of Foreign Assets Control, that deals with embargoes, also has pretty steep penalties. I won't go into them in detail, as well as ITAR. If your products are ITAR, there are also significant penalties. So all of this might make some companies say, I don't want to do business anymore overseas. There's so many penalties. But I assure you, if you have a good system of checks and balances that is being audited on a regular basis, that is documented in writing, and you provided training not only for your employees, but also your partners, such as your overseas distributors, I think you'll be in great shape. And if you ever detect any mistake, please consider informing the government, because that will also take down your penalty amount significantly. Friends, one of the requirements over the last 10 years or so, actually since 2008, was electronic reporting of your export information. Over many years prior to that, you'd need to file a paper copy of your shipper's export declaration every time the value of your products was more than $2,500 per Schedule B number. But now the government says, you don't need a shipper's export declaration in hard copy. We want electronically what's known as a EEI, electronic export information. So if any of your products are clubbed and it's more than 2,500 per HTS or Schedule B, you need to file the EEI. The exception used to be Canada, but if your products need a license, there's no threshold. You would need to submit the EI regardless of the value if your products need an export license, or even if they're being shipped to Canada and they needed an export license, you'd need to submit an EEI. Traditionally, you'd submit the EEI on what was known as the AES Direct, which was the automated export system. But the government, as of just a few months ago, is now requiring you to submit your EEI using the common platform called ACE. And ACE stands for Automated Commercial Environment, and this has become the single window or common platform for all government agencies dealing with import and export. One of the most common questions that I get regarding EEI is about a routed export. A routed export is really where there's a foreign purchaser called foreign principal party of interest, and they get the goods from the US seller, which is the US principal party of interest, it's called US PPI, who is responsible normally for filing this export documentation. But if a foreign company buys the goods from the US and requests to have the merchandise delivered to another US location, and the agent from that location then exports the goods overseas, this is known as a routed export, and the government allows both the US PPI or even the foreign party's agent to file the EEI. But there needs to be some power of attorney and specific authorization from the foreign party before the US company or even the foreign company's US-based agent can file the EEI. There are some really, I'd say, smaller penalties compared to the penalties we saw before. And these penalties are actually administered by US Customs and Border Protection. They're small, but they can add up. Friends, in the next couple of minutes, I want to talk about the most recent export compliance guidelines that the government has just published. They highly recommend that exporters have a voluntary program called Export Compliance Program in place. An export compliance program is helpful because it's good for corporate governance. It's good because it minimizes your risk for an export violation. It keeps the owners of the company out of jail time, from doing any frauds, and generally it's a mitigating factor if you were ever to go through an export investigation and get a penalty. So really what an export compliance program is tailor-made. It's a process tailor-made for your business, and has strict controls over each of the different areas pertaining to your business that has a role to play in your export transaction. The guidelines, let me go into it. Number one, they want management commitment. Number two, they want you to do a risk assessment of your entire operations to see where there could be an export license requirement or a risk for export violation. Number three, they want you to do all the screening and determining, getting your ECCN codes right. Number four, they want you to have proper record keeping. Now, obviously, in the interest of time, I'm going through this pretty quickly, but these guidelines, you can just search for Export Compliance Guidelines, BIS, and you will see the new guidelines that were issued in February this year, if I'm not correct. That's right. And it's very easily laid out with all these different phases and steps to follow and aids for you to use. It's done. It's really done. The government's done a great job revamping this. Next is they want you to have a training element in your export compliance program. And number six, do regular audits with experienced personnel. Number seven is obviously, as I mentioned before, if you see violations, take corrective action. Number eight is a little funny because what they've said is that if you don't have an export compliance manual in writing, please go to step one and make it step one. So that is true because I say that's like a GPS for any company's export compliance efforts. If you don't have a written process, you're probably just doing it ad hoc and probably making mistakes along the way. Friends, let's jump into some best practices. This is the distilled wisdom from hundreds of companies that I've seen that have done something pretty unique. The first thing you've got to remember is you need to flow chart your supply chain and identify contacts. There are administrative elements and screening elements. The administrative elements, actually I'll skip these, but our management commitment, identifying officials, developing a process for escalation. And the screening elements are, finding out more about your parties you do business with and ensuring that you're not shipping to anybody that might have a restriction. So these are the best practices, this slide and the next. And I highly recommend all of you who are exporters to incorporate these best practices because even customs and the export enforcement agencies, they've actually said that these best practices, are what they look at, they're impressed with, and they may reduce any penalties should any violations occur. Number one, have a formal statement of management policy. You could even print it and frame it in your reception area of your company. You could even have it on your website saying that company X, believes in complying with all export controls and does not tolerate any of its employees, not complying with this, And if you need more information, contact Miss So-and-so, Jane Doe, who's our export compliance administrator, right? Number two, specific knowledge. If your products are complex, technical, you need to give the person the training, of the regulations. I've seen too many companies where, it's a complicated product, satellites, telecommunications, servers, and you've got really nice and well-meaning traffic people managing it, just basic logistics people who don't have that knowledge of the training. So that's where there's a gap. Number three, as I mentioned before, flow charting your process. Number four, having written guidelines, instructions in an export manual. Number five, if you haven't updated your ECCN number, Schedule B, or HTS in the last 4 to 5 years, it's really time that you should be doing it because guess what? All of the numbers may have changed and the numbers you have may now be obsolete. Number six, Try to confirm your product's ECCN using SnapR, or if if you're unsure, use the SnapR to get a ruling for yourself. Number 7, I say effective restricted party screening. That means try to automate if it makes sense for you. If it's just one-off items, you could go to some websites and just do a lookup for free, or even look at the consolidated screening list, which can be downloadable as a spreadsheet. A lot of companies now are looking at electronic record keeping, which is allowed by the BIS as long as the electronic records look identical to the hard copy, the original. And that way you can link your export records to the purchase order or the sales contract or the invoice number, right? There's a lot of cross-referencing, and you can upload all the relevant information electronically in the same folder. Number 9, I've seen that about 80% of all your headaches when it comes to imports or exports have to do with your foreign parties. If you can give your distributors or your resellers or your foreign partners some training on export compliance, not only are you limiting your liability, like the Blue Coat case, where Blue Coat Systems got a investigation, and it looked like their Middle Eastern distributor was shipping it to Syria, although they lied on the paperwork that it's going to another Middle Eastern country. So the government said that the Blue Coat Systems had given training to its foreign distributors, so was off the hook, but the foreign distributor lied and shipped to a country it didn't have the authorization for. So the point I'm trying to make is your foreign distributors need training. At least documenting it that way limits your liability. Number 10, having a good regulatory training program is critical, and the BIS offers great trainings. They're full-day trainings, not a convenient a 90-minute one like this, but these trainings, in a full day, you're getting to meet about 100 other people from your industry. There's good networking, benchmarking, and you also get to meet the BIS people. So I would recommend, if nothing else, taking your boss there, because I've seen that senior management who go to these BIS trainings, they understand, they get it, they realize the significant bad publicity that could happen if they're in violation. Obviously, number 11, doing audits and reviews. Try not to be the one reviewing your own department's work, right? Try to get somebody from another department, like finance or quality or audit. 12, 13, 14 are similar. Have a system for detecting violations. And if you see something that's not proper, like a red flag, figure out a system of digging deeper, escalating it, and possibly saying, sorry, we won't do business because it doesn't look legitimate. Friends, with that said, I must thank you so much for your patience. This was a longer beginner's introduction to export compliance, so it was 90 minutes. So thank you all for your patience, and I'll be delighted to take questions at this time. All the questions will be anonymous, but if you so choose to email your questions to me, I'm happy to answer it via email as well. So I'll wait for the questions. There's one question that said, can I go back to the slide of the ECCN number? There were many ECCN slides, but I guess, yeah. Is this the one? With the letters indicating, okay, got it. Sorry. Yeah. So one question is, So somebody asked me to look at this line. One question is, how do I find the foreign duties and taxes in other countries? Now, I will tell you that if you were in the European Union gives this information for free, but your computer needs to be from an IP address in the European Union. In the United States, there are a couple of tools. There's what was known as Customs Info, is now Descartes or Descartes Technologies, and World Tariff. That's another FedEx company that provides landed cost customs HS codes worldwide, or even asking, your freight forwarder. So if you could send me an email, I'll be delighted to send you references. Any other questions? Another question was encryption of software. So will I yes, I didn't cover encryption because that is an advanced course, but in the next few weeks I'll be introducing another webinar on encryption, which covers cloud computing, information security, and the process for encryption. There was another question on record keeping. What are the best-in-class practices? So, what I see the best-in-class practices for record keeping are really to do it electronically. A lot of companies are looking at trade data and trade documentation automation. It might be very expensive, but you also have companies like Salesforce that allows you to upload various documents into your PO number or per transaction. So going automated for record keeping is definitely the way to go. It helps you keep all your information handy in one place. A question, what are the biggest risks of diversion that I see now? In the past, we saw a lot of Syria and Iran. And obviously, there was also the Chinese military that would try to import using its laboratories. But right now, what I see the government really going down is on Russia. There's a lot of very complex integrated circuits that could be used for aircrafts where, we are seeing a lot of diversion, and the export enforcement officials are saying that going towards Russia, they're seeing a lot of diversion, unauthorized diversion. There's one question on how do you train your foreign distributors? Sorry, I'm just writing these down as we speak. So, foreign distributors are what you've got to do. They all know about US export controls, right? But they're also trying to get revenue. What you need to do is in your contract, you need to include language which says diversion contrary to US export controls is prohibited. And, the distributor would be liable for any resulting export penalties. Another thing that you should definitely try to do is provide training. If you have many distributors around the world, try to call them over to your place of business, be it St. Louis or Memphis, and give them the training. That's great. Otherwise, if that's cost prohibitive, provide some sort of online training, such as this webinar, directed at foreign distributors and the do's and don'ts and best practices for them. So that's what I'd recommend. And going by the recent Blue Coat Systems case, where the government imposed $1 million fine, but they only imposed it on the foreign distributor because the US company had done everything it could to train these people, but they still decided to break the law. So I hope that answers. I got another question on do I help companies set up export compliance programs? And yes, I do. That's something I enjoy very much because it helps me get to know the company very intimately and help tailor make an export compliance program for them. But I'm not doing any selling today. They're just purely providing information. But yes, my services are listed on my website. Thank you. Friends, we're on the top of 90 minutes, and I'm delighted to take any other questions. The person who asked me a question, also after this question, another slide with 3 letters indicating products. I think it was ECCN. I'm not sure what the question is, but please send me an email, and I'm thrilled to clarify further. Friends, any further questions? I'll just wait a minute. Okay, there's one question on, so the 3 letters is, I think it could either be, are you asking about the reason for control, which is 2 letters, or are you asking for license exceptions, which are 3 letters? Okay, so let's assume, when you said yes, I assume you meant the second. So, okay. Exceptions, okay. So license exceptions, I'll just get to that slide in 1 second. Yeah, so if you see here, if you, let's say this was ECCN 7A006. So the license exception is LVS, which is low value shipment, GBS, Group B shipment, CIV sales, civilian sales are not available, right? So these were not available, but this are the typical licenses that may be applicable, but not all of these are applicable. What will be applicable will be listed under the ECCN number for your product in the Commerce Control List. So when you go to the Commerce Control List, under your ECCN, it will tell you which of these license exceptions will be available. There's also a new exception that has just been added about a little more than a year ago called STA, Strategic Trade Authorization. And RPL, let me just tell you, stands for Replacement, GOV Government, GFT Gift, TSU Technology Unrestricted. So these are, various exceptions that might be available. Friends, if there's no further questions, I just want to thank you once again for your patience and have a wonderful rest of the day. And if you have any questions, please feel free to reach out to me. Bye-bye.